Welcome to Next in Tech, an S&P Global Market Intelligence podcast where the world of emerging tech lives. I'm your host, Eric Hanselman, Chief Analyst for Research at S&P Global Market Intelligence. And today, we're going to be talking about financing topics and a lot of the things that were going on at the Money 2020 conference. And with me to discuss it are two returning guests who are actually there at the conference, Jordan McKee and McKayla Wooldridge. Welcome back to the podcast to you both.
Thanks, Eric.
Thanks, Eric. Thanks for having us.
And great to have you on. It sounds like there was a lot that was going on. Actually, before we get started, for those of our listeners that aren't familiar with Money 2020, can you give us a little background? Really, what's the event? What's happening? What's it all about?
Yeah, I'll give you the quick elevator pitch on the event, Eric. So this is an annual fintech conference that's held out in Las Vegas. I believe this was the 12th year that they've had the US show, I think the 11th year for me attending. From my vantage point, it is the most important event in the financial technology sector. And really what makes this event stand out for me is its scale. So we're talking 10,000 attendees, roughly a third of them are in C-suite roles, so a very senior audience, 2,000 unique companies in attendance. And interestingly, this isn't just fintech companies and financial institutions. You're also seeing a very big presence from large technology companies. So some of the biggest sponsors of the show this year, the likes of Google, Databricks, AWS, Microsoft, Oracle, et cetera. So you're seeing really the adjacent ecosystem surrounding financial services really plugging into the show and exploring trends that are evolving the sectors that they're playing in. What's interesting about this conference for me is that it's become so big over the years. It's almost like one of those choose your own adventure books. It started off focusing on payments, but now you can go and show up and have an agenda dedicated to wealth tech or banking technology or lending and spend your entire time on the ground going deep in those areas. So it is truly a fintech conference that touches every sector within the industry. And it's a great place to cover a lot of ground and check the pulse on what's happening in the markets that we care about.
Well, it sounds like really full stack of everything from the high-level apps and technologies all the way down to the infrastructure.
That's right. It's the full spectrum from the smallest startups that are just creeping out of stealth mode to some of the largest and most established players in each of the ecosystems that we're looking after. So everybody's there and really everybody's looking to learn and talk about what's on their minds as they head into the new year.
Yeah, Jordan, I think that was a great way of putting it. Choose your own adventure book. That is a lot of times what it feels like. This was my third year attending Money 2020, and I'm always amazed at the energy that it brings and just having the ability to engage with startups all the way through enterprises and hearing what's moving the industry forward and getting to kind of test some of our theories on the ground has been just tremendously valuable. And I look forward to it every year.
So in terms of what you saw there, I'm curious, were there some overarching themes in terms of what was taking place? And what were part of the conversations you were involved in?
Yeah, I can shout out a few, and then I'll pass the ball to McKayla to talk about what she saw specific to her coverage. Yeah, for me, there were three things that really stood out in terms of kind of like big picture themes that we're seeing play out within the industry. The first is the shift towards embedded strategies, embedded distribution models. And really what we're seeing playing out, and we've talked about this on previous podcasts, Eric, is that the distribution model for financial services is evolving. It's no longer just financial institutions and bank branches that are pushing financial products towards the end users. Increasingly, it's potentially any entity across any industry that is now becoming a distribution hub for banking products and services. So software companies, brands, fintechs themselves. We met with all sorts of payment processors, the likes of Stripe and Adyen, as well as smaller players in the marketplace or startups like Finix and Tild that are really positioning themselves as enablers for software companies to resell payment processing down to their merchant customers. So we're seeing this intersection of vertical SaaS and payments play out in a big way. I would say the second was this move towards open frameworks in financial services. So really moving towards more flexible and interoperable approaches towards bringing financial products into the marketplace. We saw this through open banking, right? So just before the event, the CFPB announced to finalize open banking rule, which is requiring banks to open up their infrastructure and provide APIs for consumer permission data sharing. So this was a topic that was on everybody's lips as they're thinking about the potential implications of financial institutions now needing to be more open as it relates to data access and data sharing. The trend played out as well in payment orchestration, where we're seeing more vendors embracing multi-processor architectures. So even payment processors themselves, like Stripe and Checkout.com, are now moving towards more flexible approaches where, yes, you can use them as your payment processor, but they'll also allow you to still use their technology while processing volume through some of their competitors. And I would say cross-border fits into that kind of open framework theme as well. Cross-border startups were some of the largest sponsors of the show this year. In terms of topics, stablecoins was back in the spotlight following Stripe's acquisition of Bridge just a week or so before the event. Lots of discussion around using stablecoins as potentially a lever to pull for cross-border expansion, especially for countries that have volatility within their own currencies. And we saw lots of different cross-border infrastructure providers really positioning themselves as players that can help to streamline entry into new markets. And the final theme I'll shout out is one that I'm calling Wallet War 2. So for those that have been following payments for a decade or more, you may remember the first wallet war, which played out at the point of sale back in 2013, 2014, when we saw initiatives like MCX and Softcard and Google Wallet vying for contention. Today, there are a new crop of players that are targeting guest checkout with cloud wallets. So these are players like Paze, PayPal with Fastlane, Stripe with Link, Skipify, a slew of others, really looking to streamline the process and eradicate manual entry when it comes to enabling or conducting a purchase online. So lots of players really positioning themselves around this ecosystem, trying to build two-sided value propositions. And we think next year is going to be really interesting on that front. McKayla, I know you saw some of this and more in your meetings. I'll pass it to you to talk about some of the things that you observed.
Yeah, definitely. I'll build on some of those themes that you hit on, Jordan. With embedded distribution strategies, that was definitely a prominent theme that I picked up on throughout the event as well. And, despite some of the regulatory concerns with the broader embedded finance space, really nearly every fintech I met with reaffirmed how critical strong and compliant bank partners are to supporting business operations and also go-to-market strategies. It seems like there's just continued optimism for banking as a service arrangements. We met with Green Dot, for example, who just announced their rebrand of their embedded finance platform, Arc. And to me, it just highlights that strong partners are not only key to reaching new markets and customers, but they're also just important for keeping up with the pace of innovation and increasing end user demands for streamlined and personalized experiences. And then also, you touched on open finance frameworks and cross border as well. And that's something that was very prominent in my discussions as well. So, particularly in Latin America, it seems to be a hotspot for fintech innovation still. We met with a few fintechs there. Prometeo, for example, provides an API for cross-border banking between the US and LATAM. Revolut discussed their expansion into Mexico in their initiative to streamline peer-to-peer payments between the US and Mexico. And then also Pog Brazil disclosed its plans to its real-time payments rail Pix into new markets. So to me, that just emphasizes that there's a lot of focus on streamlining the cross-border payment experiences, not just for peer-to-peer, but also in the B2B space as well. We're seeing that. And that's an area where since attending Money 2020 several years ago, I shifted a lot of my focus. So a big theme that I picked up on at the event is really the ongoing digitization of B2B payments. And that's across accounts receivable, accounts payable, working capital, and expense management. We met with large companies like FIS, Payoneer, and Stripe, which are all really deepening their reach into B2B payments. One particular theme within B2B payments that I saw at the event was just how virtual cards are really gaining traction in the market. So I met with several fintechs that are seeing increased demand for virtual cards given the value they're bringing for businesses, such as security, convenience, control, and even cost savings as well. And then to build on that, it was also encouraging to see strong attendance from B2B focused startups. That's just Brex, Ramp, Extend, Navan, and Melio. So just a lot of activity going on in the B2B payment space right now, despite the fact that there were only a handful of panels dedicated to it. It came up a lot in my conversations at the event.
Well, you'd been talking about some of the evolution of the B2B sphere in what was a couple episodes ago. And that's something that it sounds like you're actually seeing some realization of that ecosystem actually turning up at Money 2020 and some useful maturing, I guess, of where that environment is.
Yeah, absolutely. It's validating in a way to see a strong turnout for that at the event. And then also hearing how technology such as virtual cards is really bringing value for businesses. And then also how technology such as AI is automating a lot of the processes with accounts receivable, accounts payable. So, I think that we're just going to continue to see a lot of momentum in that space.
Now, you mentioned regulatory concerns around embedded distribution. Is that the open banking pressures, or are there other things that are in play?
Yeah, I'll chime in on a few things that I'm seeing there, Eric. It's been a really challenging year for banking as a service, and we've seen some fairly high-profile incidents in this sector. Perhaps the most publicized is the collapse of Synapse, a banking as a service startup that really shifted regulatory agencies' focus to bank fintech collaborations. And what we've seen over the past 12 to 18 months are a number of consent orders that have been pushed down by regulators targeting BaaS-oriented banks and really kind of targeting specifically their risk and compliance processes relating to the fintechs that they're onboarding. And so we've seen some real headwinds, to be sure, as it relates to how banks are collaborating with fintechs as well as intermediaries that might be connecting them, companies like, for instance, Synctera, InUnit, and others. But what was clear to me, and I heard this in McKayla's remarks, is that banks still play a very central role in this ecosystem, right? If you're a fintech, you need a strong bank partner to get to market, to provide financial services to your customers. And so really, like, where I saw the conversation shift this year at the event was around ensuring compliance, ensuring risk management, right? Topics like reg tech were front and center as players are really looking to kind of shore up some of their processes around onboarding and underwriting and so forth. And then bigger than that, this kind of conversation around open banking is really coming to life. It is a somewhat contentious topic, especially with the big banks, as they have concerns about potentially deposits now more easily leaving their walls and moving towards competitors. They have some real technological hurdles to overcome as they think about risk management and opening up data access via APIs. But we do think that this is going to be a real catalyst for a number of interesting use cases in the market, things like account-to-account payments, potentially bringing things like personal financial management towards the next level as information is more easily shared between providers. So I would say very early days on the open banking topic from an execution standpoint, but something you'll see a lot more from us in terms of our research as we're looking at how different players are orienting themselves around this trend, as well as the different providers that are trying to streamline information sharing between banks and fintechs.
There's a lot that we've talked about around investment in the fintech world and some of the challenges and some of the shifts. Were you seeing some of that play out? And just for background, it's that there's been a significant investment shift. There's been a significant pullback in terms of the number of deals, investments that are getting done, and this shift towards more investment in late stage fintech companies as there's a little more caution. Is that something first that's being driven by some of the regulatory concerns, and that if there's more regulatory oversight, you need to be a more mature company to actually work through those kind of hurdles? And are there other parts of this that are in play in the startup side of this?
Yeah, I'll break that down into a few pieces. I think first, you're absolutely right that there's been a dramatic shift in investment within the fintech ecosystem. So if we look at some of our data, I think the high watermark for us globally was back in 2021, where we saw more than 90 billion in venture capital injected into the fintech sector. Last year, we were at roughly a third of that. I think we ended the year somewhere around 31, 32 billion. So we've seen a very significant shift in terms of the amount of capital that's being injected into fintechs. I think that there are a few reasons for that. There's kind of the broader economic picture as we've seen rates increase over the years, as we've seen challenges from an economic outlook standpoint. The other factor at play is we saw lots of investors kind of just blindly wander into this space when fintech was red hot several years ago, throwing capital everywhere and not really having a real plan.
Investors behaving like sheep?
What? Yeah, what? Who would have thought, right?
What are you saying?
So, we call them fintech tourists, right? They kind of wandered in, they made some somewhat ridiculous investments, and then all of a sudden, the fintechs that they've invested in were not able to live up to those valuations, and we started to see the bottom fall out. So it had been a fairly rocky couple of years from a VC standpoint in fintech as a result of that. But what we have seen is fintechs kind of shifting more towards long-term sustainable growth, prioritizing profitability, thinking a lot more about having strong unit economics economics, thinking about product market fit, right? Real business fundamentals, which kind of were put to the wayside for a bit there as fintechs were just laser focused on growth and expansion. So, point being, we've seen the sector come back down to earth. We think valuations are in a much better spot. And we are starting to see investors return to the market in a much more logical way. So we're fairly optimistic next year that we're going to kind of buck the trend. Next year will, we think, post an increase over 24. And we are seeing some evidence of this in my world, right? We're seeing it in areas like payment facilitator as a service. Phoenix, for example, picked up 75 million just a few weeks ago. Tild at the event announced around somewhere in the ballpark of 11 or 12 million. And McKayla, I imagine you're seeing this to an extent in B2B payments as well.
Yeah, I think there's a renewed focus on B2B payments. And then also, I think there's definitely a focus on the SMB segment as well, which has typically been pretty underserved when it comes to B2B payments. So Melio just announced it got 150 million in the Series E round led by Fiserv for growing its AP and AR automation and cash flow management platform for SMBs. So that's just one example of, we're seeing investor interest in this space. And I think that we can expect that to not hit the levels that it was a couple of years ago, but definitely continue into 2025.
So, McKayla, you also mentioned the topic that we always have to talk about, generative AI. Oh, what were you both seeing in the Gen AI world, and what do you see as some of those impacts? Are we still in that stratospheric, breathless, Gen AI is going to fix everything sort of world, or are we actually starting to see some practical, pragmatic approaches?
For me, Eric, it was interesting. There was a little bit of a disconnect at the event because AI, and specifically generative AI, was kind of the key theme peddled by the conference organizers. I would say it was the overwhelming theme in the majority of panel sessions and main stage sessions. The theme, by the way, for Money 2020 this year was human in the machine, right? So you're seeing the organizers.
So they were starting out with an AI lead.
That's it. That's it. You're seeing the organizers really embracing this trend and trying to get some of the big players in this market, the likes of NVIDIA and AWS and others, as key sponsors, right? NVIDIA kind of held its own series of summits on the first day of the event. So from a topical standpoint, yes, generative AI was loud and clear. But interestingly, in my discussions, at least, which mostly were with payments vendors, this was a topic that seldomly came up. If we asked about use cases, sure, they had examples, right? And it was, some of the less sexy stuff, right? It was maybe for code generation or customer experience and specifically customer service use cases, lots of internal business facing use cases. It wasn't something that they were touting loudly. We didn't see much in the way of major announcements around this. So yes, it is happening, largely kind of quietly behind the scenes from my vantage point, at least in payments. But we aren't seeing anything in the way of vendors really kind of shouting from the mountaintops that this is the future of the industry and that every product that they're rolling out will be Gen AI enabled. Maybe we get there, but I think we're actually in a pretty good spot that vendors haven't become overcome by the hype associated with this technology.
That's not a bad thing.
I had a similar experience, Jordan. I was kind of somewhat surprised that I didn't hear Gen AI creep up as much in my conversations as I would have expected. And maybe it's become a little bit of a watered down topic at this point, but it's still hard to kind of ignore its impact across financial services. Many B2B payments companies are already using AI and ML to help automate some of the processes like invoice matching and reconciliation. But, I think that there's still a ways to go with Gen AI, but I do think there's a lot of powerful applications for it, particularly in B2B payments, just with helping to automate some of the tasks like accounting and invoicing. Earlier this year, Xero announced its beta testing a Gen AI powered assistant called Jax that aims to help businesses complete tasks like accounting and invoicing. So I think we're going to see it make its way into the market more, and also with B2B payments companies. But I think it's still pretty early days right now.
Well, I mean, you were pointing out on this previous episode that a lot of those, that there is a lot of low-hanging fruit. There's a lot of the ingest stuff, as you're identifying the reconciliation pieces, doing those things that generative tools are good at, which is identifying particular well-trainable kinds of things. How do you parse this form? How do you actually pull out the relevant information and make sure that there's alignment in the data? How do you clean the data? Those sorts of things. And those seems to make a lot of sense.
Yeah, I'd agree with that. First, I need to get a job as a Gen AI chatbot naming consultant because some of the names that are coming out are just wild. But no, you're right. I think payments in particular, is obviously a sector where there is a tremendous amount of data, right? We're talking about trillions and trillions of dollars globally in transaction volume. And there's so many unique insights that can be pulled out of that data, whether that be for driving authorization rate increases or potentially serving up the right payment method to the right customer at the right time to increase conversion. But the challenge for the industry to date has been that it's been very difficult to do that, especially if you're working with multiple payment processors. Getting all of that data into one place, reconciling it, and then pulling out actionable insights is a very laborious and manual intensive task. So I'm fairly optimistic about the role of artificial intelligence and specifically Gen AI for helping payments companies and those that are end users of payments operationalizing some of that data and ideally driving some of those nice business outcomes that the industry is seeking.
Well, that's a really good point. There is all the data. And unlike a lot of problems that we're trying to solve with AI, the data is there. It may be distributed, but again, if you can pull it all together, the ability to then correlate and act, there's a lot of potential there.
Totally agree. And this is a very real trend in payments right now, as you're seeing payments analytics startups start to appear, companies like Pagos, right, that are helping merchants aggregate all of their transaction data across their multiple providers, get a kind of a single pane of glass on their payments operations from a data standpoint, if you will. And then I imagine over time applying AI capabilities to that to really start to energize some of that data within their business. Payment orchestration platforms doing this as well. So this is one of the themes that we've really been seeing bubble up to the surface as it relates to taking data and really applying it towards specific business objectives.
Yeah, they're actually really putting it to work.
That's it.
Well, based on what you were seeing at the conference, what are your thoughts? And clearly there's more to do on the AI side, but what are those larger trends and what's your outlook for the year ahead? We're into November, so it's not too far to start making some predictions about where things are headed. What's your take based on what you saw at Money 2020?
Yeah, well, hey, we're working on our FinTech Outlook report right now. So you'll see a whole slew of trends that we'll be featuring that we think are going to be prominent in the new year. And that'll likely be out in the next month or so. But I'll share a few that we're seeing come to life and ones that were certainly prominent at the event. I would say one, flexibility in payments is in. For many years, most of the vendors that operated within the payments ecosystem kind of oriented themselves around a walled garden approach. And what's becoming clear is that doesn't work for most merchants, most end users of payment services. And so you're really starting to see vendors embrace more collaborative approaches. You see this through the initiatives that vendors like Stripe and Checkout.com and others are doing around supporting multi-processor, allowing some of their value-added services capabilities to actually stand alone. So merchants can use those with the other processors that they're doing business with. Like we talked about earlier, I think we will begin to see a bit of a course correction on fintech funding. We have seen that downward slide over the past few years, but as we think about rate cuts that are occurring, potentially a more stable economic outlook, fintechs really becoming battle hardened and focused on sustainable growth, I think you're going to start to see more investment moving back into this sector. And then the final one I'll share is really this trend that everybody wants to bank their users. And I talked about this a bit earlier, but whether you're a brand, a software company, a fintech, all of these entities realize that financial services are sticky, that they drive engagement, that they can be massive revenue generators. So I think this embedded finance trend will absolutely persist. It's not going anywhere. But like we discussed, there's going to be a much greater focus on risk management and compliance because this is a sector where a few bad actors who aren't careful, right, can really spoil the opportunity for everyone. So I think within this embedded finance trend, reg tech becomes a key component of how vendors position themselves and how they look to acquire customers.
Yeah, and I'll build on that, putting on my, B2B payments lens. I think we're going to continue to see the ongoing digitization of B2B payments. And I sometimes feel like a little bit of a broken record saying that, but there's really a huge migration away from paper checks, away from paper invoices, away from some of the inefficient processes that businesses have been undergoing. And with that, I anticipate continued momentum for virtual cards in particular, given their convenience and potential for increased security control and data capture. And that's all, I saw evidence of all of that at Money 2020. And in the B2C payments market, we've been saying for a long time that payments are no longer a cost of doing business. They're really a strategic lever businesses can pull to boost revenues and cut costs. And we're seeing that narrative play out in a big way in the B2B payments market as well. I also think that we can expect more integration in this market. So it's been fragmented for a long time with providers specializing in kind of the AR, AP, expense management, or working capital areas of B2B payments. And today we're seeing that more providers are actually building a network of business buyers and suppliers and catering to both sides. Some evidence of that at the event, we spoke with FIS, for example. They spoke to us about their automated finance offerings across AR, AP, and working capital. Payoneer also noted it's actively building out its B2B payments network, and they began offering kind of accounts receivable products before expanding into AP and working capital. And then also Stripe continues to widen its role in streamlining AR processes with its revenue and finance automation product suite. I also think that we're going to see increased focus on the SMB segment. So startups have really cropped up, like Ramp, Brex, Melio, which I mentioned earlier, just raised $150 million in their Series E round. So I think that we're going to see some renewed focus on the SMB segment in particular, which has kind of been a little neglected in this space.
Well, as you pointed out before, there's a lot of room for improvement in B2B when we're getting away from paper checks and cash. That's the other piece of this. A lot of potential, and I guess that means there's opportunity too.
Absolutely.
Well, this has been fascinating. I appreciate all the insights, but we are at time. But thank you both for being back on the podcast.
Thanks for having us, Eric.
Yeah, thanks so much for having us back, Eric.
And that is it for this episode of Next in Tech. Thanks to our audience for staying with us. If you enjoyed the show, be sure to subscribe on whatever podcast channel you are listening to us on. And I want to thank our production team, including Sophie Carr, Ranmia Deoshan, and Kira Smith on the marketing and events teams, and our agency partner, the 199. I hope you'll join us for our next episode, where we'll be getting the big picture on the big picture. We're just in the process of publishing our summary reports across a lot of S&P Global that are going to be covering a whole range of different perspectives. It'll be insights really across the board. I hope you'll join us then, because there is always something next in tech.